Good, good, good. Wow, that's quite a few people. I thought seeing as it was announced so late that maybe one person would join in, but it's good to see everybody. And I mean, the purpose of, I just wanted to give opportunity for anybody to ask any simple questions. That was kind of purpose number one. And then in conjunction with that, the webinar that I was having with Join Me was not very good with respect to audio. A lot of people had trouble with the audio with that. Some people couldn't even see the screen. And so I wanted to try out this new Fuse meeting and see if it was any better. And I think that from the responses so far, the Fuse meeting is really good. So that's a good thing. Yeah, hi Wally, I can see your message, thank you. Okay, so really the purpose was to see if anybody had any simple questions, if they were having trouble with anything with the software, or if they wanted me to go through how to do a certain task. It worked really well in a format down in PV last year. In the after the main meeting was over, we congregated in the lobby of the Marriott Courtyard, and I went through a few things with people, and that seemed to go down quite well. So, and they were very simple questions too. So obviously people were having some basic problems with the software. So that would be one thing. If you have a basic issue, then I'd like to hear about that, and I can go through that. And if you have any other general questions, that would be good. I don't want to take any more than an hour with this, and if there are no questions, then it could go a lot shorter. So let's, sure. If you type any questions you have in, the other thing I can do is I will be able to give you the screen. So if you have a question that your screen isn't looking the way that you think it should, then what I can do is make you the presenter. You won't necessarily have audio, but I could give you audio if you want, and I could then take a look at your screen, but obviously everybody else will be able to see your screen too, so just bear that in mind. But yeah, we'll just see how this goes, kind of a little ad hoc format. Okay, so if you've got any questions, please type them in, and I'm getting a few here now. So John says, John's question is you've locked up the program trying to use the pin buttons. Okay, what does that mean? John, would you be okay if I made you presenter and you showed your screen? And Jim, yeah, I can do that. A quick review of the SUMAC MACD templates. Yes, I can do that. Okay, John, I'm going to give John the screen quickly, and just to see what's going on with his computer. Let me just. Here we go, John. Make presenter. And you should see something now in the Fuse meeting software that you can accept to be the presenter, and I think at the top of the screen you get to show your desktop. So we'll see if that works. We'll give you a few seconds to see if that works. If not, then I'll take the meeting back and we can maybe try and work on that offline. So I've made you presenter. Let's see if I'm sharing my primary monitor. Okay. So John, do you see anything there that will let you take control of the screen sharing? and I can unmute you. Hey,
It's
John,
probably
can you?
no, I'm not sure. Question and answer.
Okay.
I'm just not operating this correctly, I'm sure.
Okay. Do you want to kind of explain what the problem is? Maybe I could just help you.
Well, I was trying to follow your video that you just uploaded on YouTube, and
Okay.
I was to the point where you were showing how to run the pin on the left and the right, and somehow
Okay.
or another I got something open on the right, and I clicked on something, and the whole thing just locked up. I couldn't get out of it. I couldn't pin things. And when I tried to do the pin thing, it wouldn't completely, it worked on the left. I couldn't get it to work right on the right. And I clicked, I got everything just locked up. I couldn't even make the program respond no matter what I pushed. Nothing would happen.
Okay. All right. Well, have you tried? Since then you've closed the program down and reopened it, right?
Right. I've got it reopened right now.
Yeah.
Is that shows, can you see that on my screen now?
No, I don't see your screen. So,
I'm going to
but
move
what?
it over. Can you see it now?
No, you're not. For some reason, it's not. It's not broadcasting your screen.
And
I
I've
think
got
there's.
part of the program on one monitor and part of it with the templates on the other monitor. I got them all separated. And I just maximized that one out. I'm going to close it back. I don't know how I got them also tore apart. I guess I'll drag the other one back. But
Yeah. Well,
they're
we're
not
not
even
seeing.
going into the right spots on the thing.
Yeah, we're not seeing anything on your screen. So what I think I'll do, John, is just kind of go over how to do the pinning, and then hopefully you'll see something that will help you answer the question. But what I would recommend is close the program down and restart it, and then you should be back into a situation where it's going to accept user input. I'm not quite sure why that's not working for you. And then I'll just go through pinning again. And this will be interesting because not everybody on this call saw what I did there. But yeah, so John is talking about this thing where windows collapse into the side of the screen. These are called panes, and they basically, you can have them collapse so that they disappear off into the one side or the other. So the way that you get that to work is there's a little pin icon called dock, and if I check that in, then it docks this pane to the left-hand side. It doesn't keep collapsing it. But what often happens is that people get this situation going on, where the windows become completely undocked from the side, and you can do that by, if you have double-clicked on the pane, it will become undocked and it will become a true window. And it also will happen if you just drag the title bar of that pane out into the middle. And the idea with that is that you can put this on any monitor you want to. But as I mentioned before in the webinar, that I always have mine on the side of the screen, and the way to get it back is, as I'm moving this pane around, you can see the little icons appearing in various places in the program, and that they are drop targets to allow you to drop this window pane either to the side, or you could have dropped it on the top. That would have been quite confusing, I'm sure. But keeping it on the side is good. And then if you need more real estate, I would just do the auto hide to do that. So give that a go, John, and then if you're still having trouble, then shoot me an email later. Okay, I'm going to take other questions now. I'm just going to mute you, John.
Detached on 2.
Okay, so now I'll look through my list and I have a few questions come in here. Okay. So somebody wants a quick review of the Sue. Jim wants a quick review of the Sue McLaren template. Can do that. Is there any way to test one symbol at a time? That's a question from Watley. So I can go through a couple of these and show you how to do this. And Jerry is having trouble with the audio, as always. I think always some problems with audio with these things. So anyway, I will go through a quick review of Sue McLaren templates if that makes sense. Okay, so So it's not really a problem that you're having with the software, but you just want to see how something works. And this is a new category of templates. And I worked on this with Sue McLaren. Sue McLaren was at the Orange County workshop with George Lee and myself and Jeffrey Scott and a bunch of others. And I gave a presentation there which talked about MACD divergence trading. But I'm not going to go through the whole presentation here, but what I can do is just quickly run this scan. I'm going to run to look for MACD divergence tops. Alright, so I've selected my daily top template. So the process is always the same. You select the category on the right, and then what happens is the category text appears in the middle of view, and then I select the template, and then the view changes to show that it's actually the template that you're about to run. And then I'll pin my symbol list. I'm using the weekly options list. So this is a list of 310 stocks that have weekly options available for them. This list is shipped with the program. Other lists are available on the forum on the website, and you can also export lists from HGSI. So make sure the list is updated first, and then we'll hit run. And this will show us a list of these potential MACD divergences. So let me explain what this view means. Okay, we have a list of all the stocks down the side, and then we have groups of columns. So group 1 is here, group 2 is here, and so on. And the columns the groupings are based on the granularity of the divergence that it is detecting. So Z is the percentage change that is required in order for it to detect the stock moving away from a certain point. It has to go away from a certain price by that percentage, and then return to within a
entry and exit chimes are off.
That's interesting. And then it has to return to within a certain percentage in order for it to be registered as a double top, and the other requirement is there needs to be a divergence on the MACD. So going from this set of columns here all the way over to the right, we're going from a higher granularity with a Z of 9, so a zig of 9, a zig of 7, a zig of 5 here, and a zig of 2. So this is picking up very small tops. Okay, so we can see, it's probably best to bring up a chart of this now, because we've done this scan and we've got XOP, and we'll see why this has been picked out as being a divergence. So I'll double click on the signal there, and I'll make this full screen. Okay, we know how to turn off these annotations, this button here. And when you're viewing a chart with, it's always good to view the chart that is associated with the grouping that you've selected, and I've selected the Z is 9 and P is 4 grouping. So I have that in a layout. Everybody has this in their layouts. If you go down to MACD divergence layouts and look for a zig of 9, and this will show us the reason that it was picked out as a potential MACD divergence. And you can see that there was a long and this is high granularity, as I said before, because it's not picking out these other potential double bottoms along the way, because this is looking for changes that are at least 9% before it's going to pick them out. Okay, so we know that price has gone back up to within 4% here. If we look down at the MACD level, okay, we can see that MACD was, that's interesting. We can see that MACD was high up here. MACD.
Entry and exit chimes are off.
Can everyone still hear me, by the way? Okay, thanks. Yeah, something funny happened with the meeting that it suddenly is announcing, asking me to accept people to the meeting, but it shouldn't be doing that. But yeah, so the MACD value over here was, as we can see, 1.8, and then over here at this level, the MACD value is lower. So that is the definition of a divergence. price came back to within a certain percentage of the same level, the price is potentially going to go down from here. I say potentially because quite easily it could go up from here, but this scan is picking out things where prices started to move in a divergent direction. So if it continued to move in a downward direction from here, let me scroll this over to the right a little bit, to the left a bit. Yeah, if price continued to move down here, then this scan would, as you run this every day, it will continue to be shown in the list of stocks that are meeting that criteria. If price happens to revert and continue up, then it's going to disappear from the scan completely because now there's no double top. So it's just a way of alerting you to the potential that there's going to be a divergence. And the theory then is that if price starts to fall off down here and you get some sort of confirmation and you have this divergence, then there's potential for a trade. But there are other things to think about with MACD divergence trading, and I'll hopefully get Sue to explain a bit more about the theory behind that. So that would be a fairly large price difference, at least 9% before it came back. And if I scroll down this list, we'll start to see others. And you can also see in the since column how many bars there have been since it's picked out this potential top. Let me scroll over to the right. So you can see that 2 bars, counting Friday's bar and then Thursday's bar was the day when the top actually occurs. That's 2 bars ago that we potentially had this double top. Okay, and now let's go and select the next one, COF. You see a similar kind of deal here. You've got a top. Clearly, anyone can see that that's a top, but who knows what's going to happen from here. But you do have this divergence on the MACD. MACD was higher here than it is at this potential top. All right, so these are all ones that occurred 2 bars ago. And you will never get one that says 1 bar ago because that's the current bar, and the requirement is that the price will start deviating in the direction that you would expect for a double top. So price would start to come down again. So you can only see it's going to start coming down after you've had a peak, and it starts on the following bar, starts to come back down. Yeah, so Jim, the 9% zig is from the high to the low before it reverses. That's true. So think about, and what I'm showing here is not a good example. Let's go back to this one. So here you've got the peak here was a value of 78-ish, and the trough here was 68-ish. So that is more than 9%. The grey line that's drawn on this chart's been set up so that it picks out zigs or zigzags, essentially, of 9% or more. All right, and that is, if you look at this chart and you bring out the formula parameters piece, you can see what's actually on this chart. We've got a zigzag indicator set to 9%. Oh, we've changed charts, but let's just go back to this one. You've got a zigzag indicator set to 9%, picking out 9%, and then you've got the 8 and the 21 EMA shown in the blue and red down here. So, but what I could do is if I change this now to instead of 9%, I could start bringing this down through 8 and 7, and you'll see the line will start to change. Okay, 4%. It's going to start eventually picking up much smaller tops and bottoms. So you see, I've changed it down to 2% now, and now it's picking up. You can see the grey line. It thinks that the grey line now is a peak. So when it's doing the test for is price at the same level, it's now, if you were looking at Z value of 2%, it would start to pick out these things. That's why these groupings are here. So you would go from maybe your high granularity down to the lower levels of granularity. The layouts that are pre-configured in this for this template are with zigzag values of 12%, 9%, 7%, 5 and 2. So that's just a quick way of, instead of typing in the new value over here or changing this value to the 9752 or 12, you can just select the layout here and it's automatically set. Okay, so what you would probably, a good way to work this would be to run your scan, look for maybe work it in from high granularity values to lower granularity. If you want to see things that occurred maybe 3 or 4 bars ago, then look down through this column until you get to a 3 or a 4 or more. They're highlighted in green if they are within 10 bars. So let's take a look at one that occurred, say, 4 bars ago. APOL. All right, and we'll see why that is a MACD divergence. Okay, Apollo had a peak here at around 35-ish. The low down here was 31. We're looking at 9%, so that is more than 9%. And then it returned up here to this peak of about 35. The MACD though, look, has been coming down all along here, and now this occurred 1, 2, 3, 4, 1, 2, 3, 4 bars ago, which is the value that was stated in the template down here 4 bars ago. So those might be, just depending on how quick you want to be with this, that they might be more interesting to you. The other thing to note is Sue talks about the confirmation being when the 8 and the 21 EMA cross. That would be, so you would look for a divergence to start with, and then your confirmation of this divergence would be the cross of the 8 and the 21 EMA, which you can see here the blue line is crossed below the red line, and so that would be a confirmation that occurred 1 bar ago. So you would have picked that up on Thursday, and then so that's a potential trade. Okay, so does that explain anything else you want to know about this template? What about all the values in here? Okay, so P is your peak-to-peak percent. So it tells you how far away price is when it comes back to the peak. So in this case, the APOL case, it's a 0%. It came back to essentially exactly the same place that it was in the first peak. So it came back almost to the same level. So you can always look for, if you're looking for things that are pretty close with their peaks, then you can look down the P column. The M column tells you how divergent the MACD is. It's actually just a difference in MACD value. So this one is minus 1.8, which would equate to, look down here, MACD at this peak has a value of 2.156, and then at this peak over here, MACD has a value of 0.351. So if you subtract one from the other, then you end up with the value that's listed in here. And how do I know that that is the how do I know that that is the value? Well, that's just the calculation for that column. What else? All right. So let's take a look at some that have slightly finer granularity. Let's look at, and to sort by any column, it's the same in any template actually. What you would do is you just click on the header. So if you wanted to get things that this grouping bring 2% to the top, you would potentially click on your divergence up here, or what you could do is click on since first and then click on divergence, and then you've got everything that has a MACD divergence sorted in order of when they occurred. Okay, and there are a lot more of them in the lower granularity levels, which sort of makes sense. All right. So let's take a look at some of these. We've got INTC, Intel. Now when I'm looking at this one, I really want to have the layout selected that's good for the 2% divergences. So I would just select this layout down here, and you can see that price has come back to around about the same level. The MACD value is slightly less. It's just, I mean, it's almost the same level. It's not a big divergence, and you can actually see that then also in the M value. The M value is minus 0.04, so it's not a big divergence. So may or may not be interested in that. And you can just quickly, if you pin this, I shouldn't say pin it, but if you make this chart window always on top, all right, there's a little button here which when you press it gets stuck in, and what happens then is when I select the window below doesn't become the top window. So that's always good. Now what I can do is use my cursor keys on the keyboard to just quickly scroll through to find these what these stocks look like. Now this one, your eye might catch this and say, oh, this is a double top because there's a peak here and there's a peak here. That's not what this scan is picking out. Remember, I'm looking at 2% zigs. This may have come out on a 9% zig. You may have got this one, but on the 2% zig, what it's picking out is the difference between this peak here and this peak here. And I know that because I'm looking at a 2% zigzag line. And so you might say that's not much of a, it's not a very good double top because it's quite a ways off. But you know, this is picking out any top that is within 4% of the previous peak. And you see the MACD value is 0.09 less. So price came quite a bit higher, although the scaling on this, you've got to bear that in mind too. This is $114 at this peak and $117 over here. But yeah, price came above the previous peak, but MACD did not confirm. MACD was lower. So that is a divergence. Okay, let's look for so yeah, these templates, these are new in the system, and you have you can do the same thing for weeklies. I mean, you can do the same thing on a weekly time frame, so look for weekly divergences, and you can also look for bottom daily and weekly divergences in exactly the same way. So hope that makes sense. Let's take a look at some other questions. Okay. Yep, answered that one. Yep. Can everyone see the questions that are being asked or not? No. Okay. I'll read out the questions, and if that's the case. All right, so I'm going right back up to the top here. Okay. All right, so there's a question from Wally about high probability ETF trading. So let me try and answer that. He says, is backtesting the high probability ETF trading? Mainly TPS strategy doesn't understand all the options. For example, can I just test longs or shorts separately, not both at the same time? Yes, that is correct. And let me just bring up an example of that. We'll look over here on the right. We'll go down to high probability ETF trading. And so for people who don't know what the high probability ETF trading is, that is a set of 7 strategies that have been published in a book by Larry Connors. And the 7 strategies are pure technical strategies giving you buy and sell signals. So they're ideal for programming into a system because there's no question about whether it's a signal. It's a signal, and the system trades those signals exactly. So let's take a look at the book, by the way, and I'll bring up, let me just show the book as well in case people are interested in that. Okay. All right, so, oops. Yeah, so this book is available on Amazon. You can actually download it on your Kindle fairly cheaply, I believe. $9.99 for the Kindle edition. So that's pretty good price. So yeah, there are 7 strategies in here, and the templates, or the category of templates in the software, are all about showing you the signals from those strategies. So they were designed and back-tested by Larry Connors and the Connors Group on a set of 20 ETFs. This is a list of 20 ETFs he tested it on. And if I just run this template today, it will tell me for each of the 7 strategies. Okay, we've got RSI 2575 in column 1, 3-day high-low strategy in column 2, and all the way through to, and then Wally was asking a question about the TPS strategy, which stands for time price scaling, I believe. So if you're looking at the signals, this is going to tell you exactly if there's a buy or a sell. Let's look at, right now it's showing you that there's a buy in RSI 2575 on the Qs, and also a buy for the same stock for the RSI 10.6 and 1994 strategy. So what we can do is we can click on that, bring up a little chart, and then choose the right layout for that strategy. And that would be under high probability ETF trading, and we'll look at RSI 2575. Alright, so now you can see there's an overlay on this chart of they're quite small green arrows underneath the price, and then there's a red arrow for a sell. So this green arrow would be a buy. You can also see the buys by looking at the bottom of the screen. Hang on one second. No, Vin, didn't get to your question yet. Yeah, so you can also see the buys by looking at the bottom area of the screen, which basically draws an envelope around the whole trade. So at the bottom you'll see in this buy and sell combination here, there was an initial buy on January the 27th, and then there was a secondary purchase. So some of these strategies have additional buy points. So it's a way of scaling in. And then there was a sell over here on February the 6th. Okay, and so if you look at the bottom in this system, you'll see the actual envelope of the trade. There was an initial buy, an add-on buy, and then the sell over here. And the arrows on the top of the chart will actually should mimic exactly what you see underneath here. Alright, so right now it's saying there's a buy in the Qs. Each one of these, it looks like in this chart, each one of these buy and sell combinations were good. Like over here, there was a buy and a sell, looked like a good little trade. And these are all small trades. They're not trying to go for big trend trading type. They're not trend trading systems. They're trying to take small pieces out of the market when the market is kind of detected to be oversold in this case, and it's relying on the principle of reversion to the mean. So these two trades here, purchase here, sell here, was probably a break even. 2 buys down here and a sell, that was a good trade. Buy here, and a sell here, that was a good trade. And then it's indicating another buy down here. But so these trades are sometimes hard to take because the buys always come in when the market is selling off. And here we had a huge bar. This was on Friday, so market didn't do very well on Friday, and this system is now saying buy the Qs. So yeah, this is just exactly what the book system says. All of the strategies are programmed in exactly as per the book. But there are also backtests done. Because they're purely technical strategies, you can actually backtest these. And if you buy that book, they have backtested results up to 2009, and then I go every quarter and kind of update my backtest of these strategies, because they're somewhat interesting and they're easy for me to backtest. So if you wanted to get my latest report on that, by the way, I'll show you where that is. Bring up my my window here. If you go to the front page of EdgeRater.com, you've probably seen this a few times, but there's this kind of teaser here, and this is really just talking about the high probability ETF trading strategy, and the results down here with the 89% winners and 1.3% average profit per trade. They all come from the TPS version of that strategy. And so what I do is every quarter I go and update the results from this after running the new backtest, and put them into a PDF report. And what you can do to get that PDF report is enter your name in here, and this will also put you on my email list, but you'll also get this PDF report. So that's ETF, high probability ETF trading, and the other product I have called ETF Trading Bandit is just purely those 7 strategies. So essentially, ETF Trading Bandit is what you see here, this template, but it's a program that's dedicated just to these 7 strategies. And I guess in the ETF Trading Bandit you see them in a slightly nicer way. And it's the program is just purely dedicated to it. So whereas EdgeRater Pro Unleashed has many different types of strategies, and can do much more. But the ETF Trading Bandit is, if you just want to trade high probability ETF trading, that's a good product to get. So the question was, can you do long and short testing at the same time? And the answer to that is no. In EdgeRater you can't do long and short testing at the same time. And whenever I publish the results, I always give the results for the long side and the short side separately for each of the 7 strategies. Let me see if I can bring up. Okay, what I'm going to do right now is, this will be interesting, is I'm going to run a performance report for these strategies, and that is just another template. The settings for this run are all contained within the the strategy tab of this template. You don't actually need to know what's in here, but this is how the system knows what to run. It's got a column for every field of the trade simulation, and so for the first row it's saying run the 3-day high-low strategy, and I'm going to use this entry script here for the run. I'm going to use this as an exit script. I'm going to trade on the long side. I'm going to enter on the close of the bar that generates the signal. So the other option is to enter on the open of the next bar. And then all of the other settings that are in trade simulation are all in here. So rather than go to trade simulation, which is over here, entries and exits, what you would do if you're going to do this manually would be to go down into entries and exits tab, find the TPS strategy that you're interested in, or any other strategy that you're interested in. Say you were interested in, let's go for TPS. TPS long entry combined. Okay, if I double click on that, and then I hit run on here, I've generated a list of all of the stocks for every day that hit the criteria. And then I would go to the trade simulation tab to tie those all in to, and don't worry about this. This was from a previous run of something else I was looking at earlier today. But yeah, you would go to Trade Simulation tab and you say, whenever one of those signals occurs, go long. We'll say go long on the next bar on close. We need exits, of course, so we go back to Entries and Exits tab, and we'll generate a list of exits, and that will be TPS long exit. All right, so now we have a list of exits. Whenever one of these signals occurs, we're going to exit the trade. So we'll say use the exit event for the exit, and then in our portfolio rules, we'll say that for TPS there are a possible 4 scaling points, whereas we looked at one of the other, the RSI 2575 strategy, and we only saw that there were 2 scaling points. Okay, but TPS is the only one of these strategies that has 4 scaling points. And the scaling levels that are mentioned in the book are 10, 20, 30, and 40. So I'm going to scale in the first time the signal gets hit, I'll buy 10% of the position. Second time, 20%. Third time, 30%. And fourth time, the remainder, which is 40%. And we'll say we'll start with, if you wanted to start with $100,000, and your dollars per trade will set at, say, let's set that at 5,000. And then all I do is I hit the run in Trade Simulation, and that is now showing me the number of trades that were made. So first of all, look at the trade list. The trade list is basically the thing that drives everything in the Trade Simulation tab. So a trade list, yeah, contains every single trade that was made. All of the other views within the Trade Simulation tab are driven from the trade list. So it's always good to go back and go and look at the trade list. This whole thing actually is just an Excel file. It's not an Excel file yet, but it's in Excel format, and you can export it to Excel by saying view this spreadsheet. Pops up another window, and then you can say save as, and you could save this as an Excel file. Okay, but anyway, you can always look at the trade list. That's always a good thing to do, and you can always sort by any of the columns like profit and loss. But some of the interesting things you can see in the trade list are the number of trades. This is something that people ask about frequently. What does TR mean? It's the number of trades that were made for that particular position. So I said there were 4 scaling points with the TPS strategy, and so you'll see a maximum of 4 trades made for a position. That means that when the stock sold off, the first time you got your entry, your 10% entry, it then went on to sell off even more, and you picked up another 20% and then sold off even more. So this one actually made all 4 of the scaling points. Okay, and was a losing trade. So you know, some of these are losing trades, some of these are winning trades. But if you want to get an idea of the what the winning percentage looks like, you can look at this chart here, which is an interesting view. Anything on the left of this blue line is essentially a losing trade, and then the height of the green bar is just how much of a losing trade, or how many trades lost that amount. So the biggest bar here is this one, which is the 1.5%, and it's saying that out of all 1,479 trades, all right, and we'll look over to the left here, there was 500 over 550 made 1.5% in this time frame, and you've got more green on the right hand side of this blue bar. So this system, you know, as statistically looks very good. And then if you look at the bottom of the screen, you'll see actually all of the trades that were made, and you can see that if you have a green bar, then it was a winning trade. If you have a red bar, it was a losing trade. If you've got big wicks on the bar, it means that the trade went further than where it ended, meaning that if it's a red candle, it means the trade was actually a losing trade, more of a losing trade than where it finished as a losing trade. And the same on the positive side. So this bar here is interesting because it means the trade was a losing trade by 12% for a fair amount of, for some of the time of the trade, but it closed at a 4.5% winner. To see what that trade is, I could actually just double click on this. Okay, and then let's look at the layout for TPS. So high probability TPS. And I would be interested in seeing where that is. Yeah, here we are. Okay, so you've got, you can see what happened here. You had first entry, second entry, third entry. Then you had this bar, which is actually the bar that had the low, that made this a big adverse excursion. And then eventually it came back and exited up here. So that's the other thing is to bear in mind with the strategies from that book, is that there are no stop losses. The way that you exit a trade, if you just read the book and take it, as written, the way that you exit a trade is just by waiting for RSI to come back to, in this case I think it is 70, and you see the RSI 2 level coming back up here to above 70. That's the reason the trade exited. So you have to kind of think about that too, because the trade could continue to go against you by a fair way. There are no stop losses in this system, and you're always just waiting for RSI 2 to come back above 70. That could have occurred if the stock sold off, down to here and then came back. It could have been a big losing trade. But we've just run the simulation for this strategy, and we know what the biggest losing trade was over that time period. It was this one down here, like a minus 10% loss. We can find that if we scroll through this list, or a quick way to do that would be look at the trade list. Look at the PL percent. It's I'm sorting by PL here, negative, and that would be XLE on 7/28/11. And that's so that's an example of how the trade does not work. Okay, there's a buy here, buy here, buy here, buy here. You don't get out of the trade until RSI 2 recovers above 70, which is down here. All right, so that's an 11% loss on that trade. Anyway, but what I was going to show was what I have just shown is how to run this manually if you wanted to do a manual test. But the template, this template, will run many variations of this, and here's the list of all of the variations. After I run this, you'll see this is populated. Let me just run that now and see. Let's get this going. You see the bottom left, it's going through and doing its calculations. But the number of tests this is running is there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 for the basic strategy. Basic strategy is without any scale-ins. So there's 10 there. And that's for the entry, exit on close. There's another 10 for the basic strategy with entry, exit on the next open. And then on the aggressive strategies, which have scale-in points, there are 12 for the, let's see, the entry, exit on close. Yeah, there are 12 for that and 12 for the entry, exit on open. And Wally, how did I do that? I did that. This is just the performance report, and all I'm looking at in the performance report is I've clicked on one of the tabs down here. You don't need to do that. I was just kind of showing what's going to happen when this report is finished running. Now it comes back with this. It comes back with this this result. Okay, so you know that we just ran TPS long manually. And that's the line that's shown in this report down here. 1479 trades, 1.34% average average gain per trade. 5.7 days held on average, and nearly 90% winning trades. So, and the short side of TPS also was a winning strategy over that time period. They only had 767 trades. Yeah, this is being recorded, John. Hopefully, it should have. Yeah, we'll find out. I think it's being recorded. So the short side had 767 trades, had average win per trade was 1.98% and held for 6 days, 6.3 days, with an 84% win. So both the long, that's what's interesting about these strategies, is that often both the long and the short version of the strategies are winning strategies, and they rely on reversion to the mean. They were published in a book in 2009, so probably a lot of people know about this already, but I find them interesting just because of the statistics and the fact that they are pure technical strategies that you can program into a system. It goes for the same for every one of the Larry Connor's strategies, actually. So he came up with, after that he had others. Let's have a look at Amazon and do a search for Larry Connors. And yeah, here you'll see a few others. There's an introduction to Connor's RSI. There is a strategy in there. There is the high probability one we talked about. There's a few others. 2-period RSI pullback is one that I've coded. Trading leveraged ETFs is one that I've coded. And all of those are pure technical strategies. And if you look on the right-hand side of the screen over here, you'll see there's a 2-period RSI pullback strategy here, trading leveraged ETF strategy here. So depending on what you want to do, and you can read the guide and decide whether it's a strategy you want to follow. If you decide you want to follow it, this program is probably the best way to do that. Certainly the cheapest way to do that. Okay. Okay, John. Yeah, so Wally, yeah, on the system trade simulation, what I did was I went to trade simulation when I was on the high probability ETF trading performance report, and I hit run on there. And after it's finished running, it will show you this template. Also, whenever you run a template, and everyone should know this, whenever you run a template, the reports are put into the reports directory, documents folder, EdgeRater, reports. Documents, EdgeRater, reports. And so even though you don't specifically ask to save these, they are automatically saved. So it's actually a good idea to go into the reports directory occasionally and just clear out all of the files that are in there, because otherwise this will just be automatically deleted. So, and they're saved as Excel files, so you can open a look at the one we just ran in Excel. That's coming up on my other window. Okay, bring it down here. So now I'm looking at exactly the same thing, but inside Excel. I won't save that. Here are some other things that I ran earlier today. So here's all the individual templates that, or I should say, all of the individual versions of the high probability ETF trading strategy that were run by running that performance report. And then I was probably running some other things earlier today, like my George Lee signals. I ran that at 12:23 today, and let me bring that up in Excel. And now we've got the result of running that template. Now, it's good to see them or have a record of what you were looking at in Excel, but there are certain things you can't do, like you can't double-click on, if I double-click on a cell here, it's not going to do anything, right? It's not going to bring up a chart. So, yeah, there are certain reasons for running this in EdgeRater. So if you don't want to open it in Excel to review it, you can also open it in EdgeRater. That's a new feature. Let me show that. We'll go to templates, and I'll click open existing report. I'll scroll, it automatically opens inside that reports directory, and then I'll scroll down to look at the George Lee run. And I was looking at that one, doesn't really matter which one, but okay, so now what I have to make sure is that I've got the right symbol list selected for this report, and I ran this on weekly options, so I'm just going to go down and select weekly options. And now what I can do is I can double click on any one of these columns, and I will see the chart of the stock. I also need to change my layout. If I'm looking at George Lee squeezes, I want to have the squeeze layout on here. And I probably want to hide this over there. And if I turn annotations on, then what I can do is quickly scroll through this list again and see each one of the squeeze breakouts that were occurring on Friday. So that's something interesting to do. Right, let's have a look at some other questions. So it's quite a lengthy answer to your question there, Wally. But that's what this is for, you know. So if anyone has any little questions, doesn't even have to be a big question. It can just be a small little question. If you're having trouble, like John was with pinning things to the side, anything like that, I can answer that here. And we'll try and do this again, maybe same time next week or something. I'll send out an email, and if anything crops up in the meantime, then we'll do it again. But let me just take a look at some of the other questions that are coming in. And we have quite a good number of people online. This is very impressive. Probably about 25. Very good. Dennis has had trouble with the audio. Sorry about that, Dennis. Hopefully you'll get the recording and the audio will be good. Okay, let's go back up to the top. Wow, there's a lot of questions here. I might have to just I was going to limit this to an hour, but we might run over a little bit. Let's see how far we get. Fred, you were one of the first people to ask a question, and I didn't even answer you. Sorry. Yeah, how can you backtest some of the strategies like the George Lee signals and MACD? So that's an interesting question, Fred. And what I showed just now was a pure technical backtest, essentially, of some of the high probability strategies. Now, with the George Lee strategies and the MACD strategies, you can't really do what I just did. But what you can do is you can run the scan for a particular date, historical date. So, for instance, I could say, set my historical date to February 5th. Let's do that. And then what I could do is run this for February 5th. Oh, that's interesting. I don't know what that was. Sometimes you see little bugs in the program, and if you ever do see something like that, hit the button that says send error report, which I forgot to hit. And that will actually come in, and I'll be able to take a look at the reason for that. So yeah, apologies for that. I'm just going to rerun the program here. All right, and we'll go back to over here. We'll go to George Lee, daily signals. We'll hit our run. Well, we'll set our date to be February 5th. February 5th. We'll make sure the symbol list is the one we want to use, weekly options. That's fine. And we'll run that. So now what I've got is a report here for February the 5th. The date column, B column, is February 5th. So all of these signals were true as of that day. So the way that you would sort of, this isn't really backtesting, this is more like walking forward, but what you can do is you can say, well, what had pocket pivots as well as a squeeze on February 5th? And if you click on the column header first time, it sorts it, it's out an alphabetical sort, so it sorts it by, oh, or is it, yeah, so sometimes you have to click on it twice in order to get the true signals to come to the top. So I can see that there were 4 pocket pivots that also had squeezes on February the 5th. So one way to visually see what happened since then is look at your chart. Obviously, this is something you can easily do, as you know. And then what you would see is you've got the annotations pointing out the day that it was squeezing, and you've got a pocket pivot. And I can zoom in if I wanted to. Let's just open that up a bit. And you can see what happened since then because you've got data beyond that date. And what I can also do is just scroll down through this list. So you can see those Green Mountain, this was a very good signal. We had pocket pivots on February, let's just zoom in on that. Pocket pivots on February 5th, whilst in a squeeze, and the following day opened up very with a big gap. So that was the best trade, I believe, of this time frame. So then, if we look at Pandora, that was not a good signal until later. So, but anyway, this is a way to just see the signals as they occurred historically, and then view what happened later. But one of the things I added recently was the idea of being able to select a group or a set of signals. So I'm selecting all things that had pocket pivots on February 5th, and then what I can do is say add this to my list of entry signals. And then if I go over to my entries tab, you'll see it's populated in here those 4 symbols. So I'm going to use those now to do some testing. So I can say trade simulation, I'll take each one of those along on the close of the bar, and I haven't set any exit signals in, but let me just say I'm going to hold for, this is kind of random, but I'll give you an example. I'm going to hold for 10 days, and then I'll exit at the close of the 10th day, and I'll say run there. There's only 4 trades, as we saw before, so, and they're all 10-day holds, and you can see that, you can see GMCR was the winner, and Dish was a losing trade. And now if you ever double click on one of these from within the trade list, you get the entry and the exit highlighted too. And I can scroll down and quickly see what they were. So that's a way of doing backtesting on the George Lee and the Sue MacD stuff. And the let's see. Let me try and show you. These scans are, let's say that the scan template is it uses a lot of Excel formulas in the template. So when I'm doing things like combining pocket pivots and MOBOs, setting up my list in the various order that I want it, or sometimes it's even giving me a signal based on an Excel calculation. All right, so a column could have an Excel formula calculation give me the result. So it can't be back-tested in the software because the software doesn't use that. Software uses just a scan script that you write. It doesn't take these templates and go and sort of crunch those historically. But this is one way that you can do that, kind of semi-manually. Yeah, you're welcome, Fred. Let's go up to the top. Okay, Fred. So James, you asked about the warehouse report, and yeah. All right. So we did that. So the warehouse report for HGSI. What you have to do in HGSI. So let me explain what that is first. Are you still online, by the way? James. All right, under the Woodward and the Brown category, we have all of the good stuff that I've been working on with Ian and Ron. And one of the things that came up was in HGSI, it's got a whole wealth of information, and it's great for showing you ERG and all kinds of stuff, and boxes and this and that for current day, but it doesn't maintain a history of all that information. So, excuse me one sec. So what I wanted to be able to do was say, what happens with how does ERG and things like boxes, if items stocks are within box 1 through 9, if they have an AD letter rank of A through D, and so some of the other fields that are in HGSI, what happens in terms of the performance of those stocks, and how, it'd be interesting to see that. But what I have to do is save off the HGSI warehouse as a HTML file for the day that I want to run the test from. So you have to have back history of these files. Now Jeffrey Scott maintains this. He does, part of his nightly update, he does those I think every week. So if you ever have a file that you want to get, then Jeffrey's the man to talk to. But let me show you how you would do this if you wanted to do this yourself. So I'll bring up HGSI. I'll bring up my warehouse. And now I'm going to choose a view that has the fields that I'm interested in. And there should be a view in here called Archive View. That's the one I want to use. Of course, finding that is going to be a challenge, but here we go, Archive View. It's under Ian Woodward and Ron Brown, March 2014 seminar, but you might not have that one if you weren't at the seminar, but you'll still have an Ian and Ron group, and also they said that they're going to put this into the software very shortly anyway, so you'll have this if you weren't at the seminar even. And you should have the archive view anyway in one of the other Ian and Ron folders. So I select that archive view, and what I can do then is say run this on my list of all stocks, all securities. And there's a quick way to do that, but I did it the long way. And the archive view is an archive view because it essentially has every field, or pretty much every field. As you see, I'll scroll through, keep scrolling through here. We've got every piece of information from the HGSI database that you would care to know about. And so what you would do then is you'd say save this as an HTML file. Now would that be under File? There you go, Save as HTML. And what I'll do is put it into let's put it into Documents folder, EdgeRater, and I'll just pop it into a folder down here that I'll call HGSI Archives. Now, of course, you can put this anywhere you want. And if I double click on that and I say, I'll just then make sure I know what date this was saved for, which is 04/06/14, or however you want to number that, and then click save. And so it's saved successfully. So you do that every, however often you think you might want to be running this report, and I would do it maybe every week, every month. I don't think you need to do it every day because things like AD letter rank and boxes don't really change that frequently. And then let me open up this archive view. You can see there's a file there, it saved it. It's about 3 megabytes. I could open this up now. It's an HTML file, which is a web page, so I could open it up in a web browser, but I won't do that because it's a fairly large file and it will take a while to load. But say you save this for, let's pretend that was saved for January the 1st this year. And then what I can do is go into EdgeRater, select my warehouse report, click on Change Settings, select the file, alright, and I'll select Archives, there it is, open. And I want to run this report from the 1st of January 2014 through to today. Alright, so it's 04, 06, 04, 614, okay. And what you can say is you can say, let me just click OK here. There's a field in here called Auto Generate Snapshot, which is interesting. And I'll explain what that is in a minute. I'm not going to set that because what will happen if I now run this report, what will happen is it will go through every one of those stocks that was in that template, extract that information from HGSI, build up a new snapshot with all of that data in before it generates the report. So that will take a little bit longer to run. If you have already extracted that data, and maybe you have an all securities list, like what I do, then I can make sure that list is selected over here, and then I can just run this report without generating the snapshot, and it will use the data in this list to generate that report. So let me run that now. And it should, because you're not generating the snapshot, it should run fairly quickly. Okay, it says completed here. And we just then go and look at the dashboard. And we can look at boxes. So what we're trying to do here is get an idea of how those various parameters affect the performance, you know, if they have any bearing on how a stock performs in the future. Obviously that's very interesting to know, right? That's what we're all here for. So let's take a look at the dashboard, which is basically the summary of everything. And I've squished this up so you can see my screen better. Alright, so, and what this is showing then is the top of the screen is showing you your ERG versus percent gain. And you can see that as ERG goes up in these buckets, you get to an ERG value of 281 to 290, which had a 170% gain. So clearly there are some, it's important to look at the grey line underneath this chart, because that tells you how many stocks were in that bucket. So if there's right down here, there's like one stock that's in that bucket and it had 150% gain, it's going to skew the results a bit. Then you can look at things like, you know, how the AD letter rank affected performance. So here you'll see that letter rank E, they had a minus 10% gain in general, whereas letter rank A, they were 8% gainers. So, and this, you know, the curve of this is exactly what you would hope to see, but bear in mind I've not run this properly, right? What I did was save today's template and then looked at the performance since January. So it's put in the cart before the horses. You need to have January's report if you're going to run the report from January. And here you can see that things that are in box 5 had a much better result than things that were in any of the other boxes. But you get a much better view if you run that on the correct templates. So the dashboard shows you everything. If you look at other tabs in here, you'll see the individual calculations for those boxes. Notice on the dashboard I've got ERG versus percent gain. I've also got EPS rank, RS rank, group rank. So it's broken down ERG into the components E, R, and G. And then I've got AD letter rank and HGS boxes. And each one of these tabs down here is just that thing individually. So if you wanted to get more detail, you could come down here. And then along with this template now, this report has actually got a whole bunch of data in here too, and you'll sort of see the way it works if you were interested. It's basically taking the warehouse, so this is a copy of the warehouse from column D through to wherever. It's then taken the close price on the date that you started to run the report and put it in column A. It's taken the close price on the date that you're ending the report and put it in column B, and then it's calculated the percentage change in column C. So what you should see is that last close, which is a warehouse column, 90.29, you'll notice that has appeared in my column here because I just exported this. What you would normally see is that last close should match up with your from date, not your to date. So yeah, that's kind of the way that works. Hope that I hope I explained that well. Now let's move on. I think we might want to wrap this up in a minute. If there are any questions left over, what I'll do is keep a note of them, and we'll come back next time and answer those. One question was how can you, let's see. Okay. All right, this is I'll probably end on this. This is a simple question, and that is, if you're doing backtesting, well, let me select my weekly options list. I like to use that. If you're doing backtesting, is there any way to run backtesting on just one symbol? So if I was looking for, let me look for, I'll do a scan over here for stocks that are closing above the upper Bollinger Band. That's my scan, AUBB, where Bollinger Bands are set at 20 and 2. All right, if I run this now, and I've collapsed the top menu, so I have to get that back, which is just by clicking on here. And if I double click on there, it becomes permanently down. All right, so if I run this on weekly options, then it's giving me entry signals for every one of those stocks that are in that list. But I could just run it for one stock, or two, or three. I just check the stock, the symbol that I'm interested in running, and click on run, and then it's just limited to those selected. So that was the last question I think I'm going to answer. It's yeah, so I hope that was interesting, and you're welcome, everybody. Thanks, James, and thanks, Fred. And we'll come back and we'll try and answer some of the other questions at another time. This is also recorded, so I'll send a link out to the recording, and you'll get an idea then of what we went through if you missed something. And I'm going to try to make a note of all of these questions, and I'm hoping if I just do this, you can't see what I'm doing, but let me do that, and then do that, and then that. Then I've got a note of all the questions. Awesome. Okay, great. All right. Well, thanks a lot, everybody. And I'll send a link out shortly to the recording. Bye for now.